So we go to economics chapter 37, macroeconomic objectives. And when we talk about macroeconomic objectives, we are talking about broad goals that the government is aiming to achieve to improve the economic performance of the nation. That's what macroeconomic objective is. So I wrote macroeconomic objectives are the broad goals that government aim to achieve to improve the overall performance of an economy. So the government of Libya has its objective. They are macroeconomic objectives. And these macroeconomic objectives, if they have been achieved, it will improve the performance of the country. So that's why we call it macroeconomic
Okay.
objective. So we go further. So we have government objectives. And when we talk about government objectives, we're talking about the aims of government, what their plans, what are those things that they need to put together to achieve those aims. And there are four variables here. We have the economic growth, unemployment, inflation, and the current account. All these are variables that they will call them variables because they change over time. All these things are what government have to work on if they actually want to improve the performance of their economy. And if they are improving the performance of the economy, it means the economy is improving in terms of the current account, unemployment is reducing, the economy there's a stable price level, and there's increasing GDP and increasing GDP per capita. So we're going to start with economic growth, which is the first objective of any government. So I wrote government of different countries. Government of different economies always aim to achieve maximum growth rate. For low and middle income countries that are still going through industrialization. And when we talk about industrialization, it simply means a process through which a non-industrialized economy becomes industrialized. We call it industrialization because it's a process
Mhm.
through which a non-industrialized economy
Mhm.
becomes industrialized. And what does that simply imply? It simply means that an economy that is in the primary sector
Mhm.
now shifts all its workforce to the secondary sector. So that is what industrialization is. So industrialization is in the secondary sector of the economy. That is where we have to convert raw materials into finished goods. I think you understand what industrialization is now.
Mhm.
Great. So, so as they may be able to move large numbers of workers from low productivity agriculture to higher productivity manufacturing. So the point about economic growth is being linked to low and middle income countries. For low and middle income countries, they are just moving towards industrialization. So they have enough resources available to increase their growth rate. That is the point here, because they can move more resources from the primary sector to be more effective in the secondary sector. And that gives them a high rate of growth. Unlike developed countries that have high income, they've already passed the stage of industrialization. So they are in the tertiary sector.
Mhm.
So as a result of that, they might not be able to have a high growth rate like developing economies because they mostly do services. Their GDP would rise.
Okay.
But what we're talking is about their growth rate. There's a difference between your growth rate and your GDP. So they will have a high GDP, but it is difficult for them to maintain the same growth rate as developing economies because developing economies have abundant resources. Do you get it?
Yes.
Any question about that?
No.
So that's the first stage about economic growth rate. So the next point is employment and unemployment. Are you there?
Yes.
Government would like to see, so unemployment is another aim of government in terms of macroeconomic objective. Here I wrote, government would like to see unemployment as low as possible without there being inflationary pressure in the economy. So government of every economy would want the unemployment rate to be as low as possible, but putting in mind that it won't lead to what we call cost push inflation or demand pull inflation. That is inflationary pressure. However, in the free market, it is impossible to have no unemployment because there's always going to be both seasonal and temporary unemployment. Like you asked me the other time, have I ever been unemployed? Yes, there will be a time I'll be unemployed because, okay, we are teachers. During the summer, we are unemployed. Mostly the summer, we might be unemployed. So that is seasonal unemployment because school has to end. There's going to be holiday. So that would be seen as seasonal unemployment. And because it's in the primary sector, it's in the in the free market. Unlike government sector, government will continue to pay even teachers, even if they are on holiday, because they are government parastatals. That's why they said in the free market, there's no way we would do about to forget about unemployment, either seasonal or temporary. So like I am right now, I'm on vacation, so the school is on off. So I'm on seasonal unemployment. Do you understand? So, or probably I'm looking for a new job. So if I'm looking for a new job, that means I stop my I quit from my current employer, looking for new employers. That is frictional unemployment. So in the free market, it is impossible not to have either seasonal or frictional. You have seasonal because it becomes compulsory based on the fact that demand within the economy is falling, demand within that sector is falling at that present time. Or it could be frictional because all employees would want a better opportunity. So because they want a better opportunity, they wouldn't get a better opportunity without living where they are. So the period at which they live where they are to the next place is called frictional unemployment. I think the point is clear.
Yes.
Great. So this really occurs in the private sector, that's in the free market. So I talked about seasonal unemployment already, which is this occurs as a result of a decline in demand for labor at a particular time in the season. And temporary is the same as frictional, which means the period between you switching from one job and quitting one job to seek for another. So these two unemployment situations are mostly occurring or will mostly occur in the free market economy. I think the point is clear about. So most governments are keen to expand employment because higher employment is expected to increase tax revenues and reduce welfare benefits to the unemployed and those on low incomes. So government of every economy would want to increase employment rate because increasing employment opportunity means government will stop paying unemployment benefits. And those that are low income, government would not also pay them. And aside that, with increasing employment rate, it means government taxes would also increase. Government revenue in form of taxes would also increase. So these are the reasons why government would always want to achieve high employment rate. Because with high employment rate, it increases aggregate demand, it improves the economy, it improves the living standard, and it reduces government spending on welfare benefits. I think employment is clear.
Yes.
So that's another objective. Then the next one is inflation, right? For inflation, the central bank and government set inflation target at of around 2%. This is seen as low but positive inflation. So higher inflation is seen as undesirable because inflation will continue to rise over time. There's no way inflation can be stable. So that's why most of the time, there's always the central bank and the government, in collaboration with the government, would always want to set an inflationary target for at least low 2%. Because they know it will not continue to be 2%. Demand would increase. As soon as demand increases, there's going to be demand pull inflation. But if the inflation is high, then it becomes a problem because it might lead to hyperinflation. Do you understand?
Yes.
And if inflation continues to rise over time, it will also lead to recession. Do you get the point? Because aggregate demand is expected to fall. I think you get the point I'm making there, right?
Yes.
Okay. So nonetheless, governments of economies will want to avoid deflation. Deflation is not even part of what we have to discuss because deflation is a persistent fall. It's a negative inflation rate, and it means a persistent fall in the price level. If prices continue to fall, it affects firms. Firms will make less. They won't have any incentive to increase investment. And if investment is not increasing, aggregate demand will fall. If aggregate demand falls, unemployment will rise. So it is not desirable at all. Deflation is not what we need to even encounter or witness as an economy. I think the point is clear.
Yes.
With a stable inflation, economic agents will be able to plan for the future. So that's why government of every economy would want to try as much as possible to stabilize price. Because if price is stable, firms will be able to plan for the future, individuals will be able to plan for the future, government itself will be able to plan its budget. I think it's clear. The next one is the balance of payments on current account. Are you there?
Yes.
For balance of payments current account, government aim for the balance of payments on current account to be balanced over time. As economies with regular surplus are seen as strong, economies, while those running on regular deficits are seen as to be weak or what do we call it? Yeah, weak, or we can use another word for struggling. They are struggling economies. So, however, in reality, it is far more complex than this initial judgment, because a country might run on a constant deficit due to high importation of capital goods. So Libya might be having a balance of payment current account deficit because it does more of imports. But what it does in import is the importation of capital goods that will help its productive potential here. Do you understand? So in the short run, the deficit will be there. But in the long run, the economic growth rate would rise. So we don't judge a country based on the fact that it's running on the deficit right now. That's the point I'm making here. Some countries might run into deficit presently because they are planning for the future. And some other countries might be running through surplus right now because they are exporting most of their resources that are non-renewable. So, which means in the future, it is unsustainable. So you don't judge with the present situation. You have to understand the aims and what led to the deficit or the surplus. I think balance of payment current account is clear.
Yes.
Good. Then we go to government budget. So when we talk about government budget, we're talking about the financial plan of government on expenditure and revenue. So yeah, the government are always aiming to having a balanced budget. And when we talk about a balanced budget, it means government expenditure is equals to government revenue in taxation. So however, the government of a given economy may choose to have fiscal deficit to be able to inject money into the circular flow of income. Some economists argue that fiscal deficits should be cut as quickly as possible, even if it means negative economic growth rate or a significant increase in unemployment. Other argue that cutting fiscal deficit at a slower pace is better because it allows the economy to grow faster, leading to quicker rises in tax revenues and fall in welfare payments to the unemployed. So, government budgets is about fiscal. So, government would always want to aim for a balanced budget, but sometimes government would have to run into deficits to improve the economy. And what does that simply mean? It simply means that government might want to inject money into the circular flow of income. And injection into the circular flow of income would really have a positive impact in the growth of the economy, because injecting means more firms will be able to invest, individuals will be able to have more income, and that would improve aggregate demand. But it will mean that the government will be running on a deficit because government spending would have exceeded government expenditure, or government spending would have exceeded government revenue. So some economists argue that it is not ideal because it will make the economy to go into decline. That means a deficit budget for the economy, which is, some economists, they believe it's not ideal. But other economists believe that government injecting into the circular flow of income would also help government in the long run, because investment would be able to be increased in the economy, which increases GDP of the economy. Employment would increase, which will also increase government income taxes and reduces government spending on unemployment benefits. So it depends on which side the government wants to, so which side the government wants to, acknowledge. I think the point about budget is clear.
Yes.
Great. Then the next one is the environment. Are you there?
Yes.
For the environment, there is no simple wrote. Government have a wide variety of objectives in relation to the environment. Most of the time, they acknowledge suggestions of environmentalists and pro-growth economists for decision making. So government is not expert in environment. So they need to listen to experts. They listen to environmentalists, they listen to pro-growth economists. And when I talk about environmentalists, they are mostly anti-growth. They believe increasing economic activity will continue to damage the environment. But on the other side, the pro-growth economists, they argue that increasing output will bring about improvement in technology, and which also means that if there's improvement in technology and there's improvement in income, economic agents will be able to invest in clean environments. That is the point. So I wrote, for environmentalists, they tend to argue that the increased economic activity will damage the planet, while for pro-growth economists, they tend to argue that increases Increases in output and improvement in technology will clean up the environment. So they believe continuous improvements, continuous increase in output will increase income, and which if income increases, the economic agents will be able to invest in a cleaner technology that will improve or clean the environment. That's about the environment. Is it clear? Any question about that?
No.
And the last one is income distribution, which is a wider one. Income distribution. When we talk about income, we're talking about income distribution is simply talking about the gap between the rich and the poor. So how income is being shared among people in the society, among different levels in the society. So here I wrote, there's no clear objective and general agreement about income equality. It is difficult for income to be equal. So it is based on the perspective of different politicians. We have the right wing and the left wing in the UK. So the right wing, they are in support of income inequality, but the left wing, they are in support of income equality. So for me, I'm not going to talk about the right wing or left wing. I'm just going to talk about economists and politicians. Okay. So here I wrote, some politicians and economists argue that inequality is positive because it increases incentive to work and take economic risk, which in turn increase the growth rate and raise income for all in the society. For some economists and politicians, they believe whenever there's income inequality, it becomes an incentive for people to want to work, for people to want to take risk, because they know if they're able to work, they're going to be able to increase their income. If they're able to take risk, the reward is high for them. And if those things happen, it increases the income within the economy or the society. That is according to the right-wing economists and according to some politicians and economists. I think you get the argument here.
Yes.
The argument is that inequality becomes an incentive for people to want to increase their level of income through work or through investment. Clear?
Yes.
Why other politicians and economists argue that on the principle of fairness, everyone in society should have access to certain standard of living. And that's the free market leads to a high level of inequality. Therefore, government needs to intervene to reduce inequality. So for some politicians and economists, they believe with the spirit of fairnessness, which means everyone in the society should have access to certain level of standard of living. But the free market the free market brings about inequality in the society, because the free market might increase income for highly skilled, reduce income for low skilled. So there's always going to be inequality in the free market. So that is a market failure, yes or no? So therefore, government should what? Intervene. So how can government intervene to reduce the gap between the rich and the poor? One, setting minimum wages. When government sets minimum wage, it means no firm will be able to pay lesser than what the government has set in terms of wages. That's one way to reduce the gap between the rich and the poor.
Oh, yeah.
Two, maximum prices. Setting the maximum price means no firm will be able to charge a price above that selling price. Do you understand the second point? The third one is provision of healthcare and quality of education. With provision of healthcare, it means individuals will spend less on healthcare. That means it will increase their purchasing power. So because government is spending, government is in charge of health services. So which means they have more money to themselves, and can increase their purchasing power. That's on healthcare and education. If the low income earners have access to quality education, that improves their skills and it makes them to be more employable. And that is likely to increase their income. That is the point there. And the last one is progressive taxation. Increasing taxes for high income earners, reducing taxes for low income earners, or distributing the tax on high income earners as benefits to low income earners. So these are ways in which government can intervene to reduce income inequality. That is for the left-wing politicians and other politicians. You understand? So it's just about which side government wants to accept. So that ends macroeconomic objective. Any question about it?
No.
Thank you.